Now, I just want to make a video on how I should have done better with cable. Now, to be fair, I was being distracted, and this is only practice. So I was being distracted by dollar CAD, and I was taking on too much. But the rule being waiting an hour after the open. So here's the open, um, and there is time to take action. So we'll just mark that out. Um, Mark that out over here. Right. So let's go down to let's go up to the 15-minute chart. So a quick rendition then of the how this trade unfolded. So Monday, um, extensions of the low of the bear trend, and then coming back up. So there's the peak formation Wednesday. So day one, day two, and we're into day three. So what do we expect on day three? Either a continuation or a move lower. Now, we knew that we had all of this money down here. Trying not to put fundamentals into it, but the risk rally was a bit bizarre. Um, so we had this price imbalance over here. Now, this could have gone either way. It could have gone up or could have come down, right, into the last day of the week. But we take the signals. Now, we had the peak formations here. This is a peak formation. Red for bearish. Okay. In Asia, peak formation, which had basically effectively moved up into the peak formation over here. Right, so we've got this topping pattern and we've got support. We've got support down here. We'll call that, give that green. Oops. Why isn't that turning green? I'm not doing it right. Right, usually is a user problem on my part. Right, so put that over to here. Visual want to bring forward. Right. So there we go. Now let's turn that a different shade. Okay, so let's see what's going on in the price action. So that was peak formation, so a double top, and we are looking for a breakout. And the breakout came about. So we had the 15 minutes pushing up and being rejected. Okay, so at the close of this candle, well, at the close of the close of the 45-minute candle, sorry. So let's go back, rewind selector. How do I do that? There. Right, so I would have had an alarm set on these lows, and we would have been triggered on that alarm with the spike crossing. Now, to be fair, at this point, I'd be looking on the 5 and 1 minute chart, really, to be fair, looking for what's going on in terms of price action and structure that's being formed. So let's just go down there now. So on the 5 minute chart, we can see that we've had these sort of pushes up into this resistance. Now we might have expected another peak formation in London, Frankfurt, and so forth, but so far nothing. And then we had this almighty, well, relative almighty move, relative speaking, breaking this sort of trend line that was being formed, channel. Okay. So at this point, you've got to be thinking, well, what's going on here then, right? And if we come down onto a 1 minute chart, right? So at this point, we would have been moving across. Okay, so that's the end of the 45 minutes. And we're now into the next 45 minutes and the next 15 minutes of the hour. and we're seeing this unfold. Okay, so this at the above the numbers into the peak formations. Okay, this is price action that we want to be taking part in, right? So we're looking for something like that that's forming now, right? So we've got this really strong bear candle. Um, we've come into the structure and of this breakout, right? So at this point, we want to be thinking about an entry, and certainly on this engulfing candle. And there we have the pin right at the round number. We've got this lovely three-line strike, right? So that could be our entry right there. This M formation and this hammer, whatever you want to call it, shooting star or whatever it is, right? And this follow through, lovely stuff. So that would have been our entry over here. Um, with a stop loss, you know, I mean, I might have wanted to be safe and put it up over here, or just stick to the 1 bar rule, 15 pips stop loss. I'm pretty sure that now if we're running for 50 pips only, and we're down there, and stopped out. And that's why you got to pay really, really close attention to the price action at the top of the range. Look what we had up here. We had the M formation. We had the engulfment. We had these pins. We had this engulfment. So this was the catalyst to get in. But okay, and we'd had the sort of the breaking structure. But if I wanted to be really sure, I would have waited for another retest. And that retest would have been up here with this three-line strike trigger bar. And that should have been the entry, right? And if we're going for 50 pips only, then, well, let's say we got in down here somewhere, right? We got a stop loss above the 1 pair bar stop. So put it a couple of pips because the spreads were pretty wide for some reason. And if we were going for 50 pips, then we would have been just about. Now, I would have been going for more than that, to be fair. But yeah, we may have got our fill in that candle there, perhaps. But to be fair, I would have been going for more than that, much more than that. I would have be game for all the way down here. So let's see how this would have played out. There, I would have been break even. Oh, look at that. There we go, there we go. Up we go again. Right, so this would have been broken even. Yeah, sterling, a lot of political. There you go. There's the move. So, I mean, You've got a lot of volatility in here. I mean, in fact, I didn't actually move to break even. It's too volatile to move to break even, but my stop was up here. It was a 50 pip stop loss. So um, I've got to be all the way down. I can't remember where my take profit is, but it's tactically there's down here. So I've still got another 100 pips to go just to get my 5R. Whereas here, I would have had that 5R, within 100 pips. So there you go, guys. That was a video on demonstrating the Stacy Burke strategy, making errors along the way as we learn it. And all this is great because that's how you learn. So for next time, remember, watch for these 1 minute M formations, the retest that failed to go higher to break the peak. Right, we're coming back into these peaks, and at the timings, right? So we've had the hour, or pretty much have we had the hour? Let me check that. So down here somewhere, for the first 45 minutes. So that's good enough. And bang, in. Now, ideally, I would want to wait for the hour. Um, but and I could have done well. I mean, had I done, let me see, check that again. If we'd done that short on this, on here, the stop. I mean, really, you want to be above the highs, right? Because the market is volatile, and but in this case, no, I was all right. So had I waited the hour, I still would have been all right. Still would have been all right with a 1 bar stop going for 50 pips, 4R, 3.5R for 3R. Okay, call it 3R in a matter of half an hour. But I was figuring more, so more to go. So really nice. I mean, on that one, we would have been 7R. But over the course of a 24-hour, no, over the course of a day, right? Over the course of the day, the entire session essentially, up to the entire session. But not bad, right? Set it, leave it. Don't worry about. You get stopped out, you get stopped out. Simple as that. Because that is a beautiful trade. So, and in terms of the market here, so you have the price action. You got this M. You got this other M. All these micro M's, right? But which one do you take? You take the one that breaks structure. That broke structure. That was the engulfment, right? Um, so just get in. I would have just get in where you can. Get in here, right? You could have had the stop above there. May as well put it above the highs if you're so close, right? For 29 pip, well, it's a bit much really. Maybe maximum 25, but a 1 bar stop, yeah, it was up there, 20 pips. Currently, how are we doing anyway? What are we doing on this? It's coming up to the. We've had the close on Wall Street. Probably had a load of profit taking, I should imagine. Get rid of this. Right, we're running at break even. Well, we pretty pretty far off from my target. We'll just take the money. Not really ideal, but it was a. It will be a. What are we getting? Running here. Stop loss was all the way up there somewhere. It's above the highs, isn't it? So it'll be a 2 hour transaction. Right, I'm going to make the decision to let this run because I don't envisage there being a 100 pip spike to the upside in the open. If anything, we should get that to the downside. The risks are balanced unfavorably for the pound, and it's still got a fair bit to go to mitigate this move. So we'll just leave it in for the weekend.